Good morning, good afternoon, good evening. My name is Market Maker 69420, and in this episode, we're going to talk about the midweek market open. As markets open on Wednesday, March 4th, 2026, investors are navigating a volatile landscape shaped by lingering geopolitical tensions in the Middle East, including ongoing conflicts involving Iran, Israel, and U.S. interests. Recent reports of potential talks to de-escalate have helped stabilize sentiment somewhat after sharp moves in recent sessions. Futures point to modestly higher open for major indices following Tuesday's decline, with oil prices steadying and gold rebounding as safe haven play. Broader risk appetite remains cautious amid upcoming economic data and corporate earnings. When looking at the stock market, U.S. equity futures are showing slight gains at the open, with S&P 500 up modestly around 0.1 to 0.3% in early indications. Dow futures mix to slightly higher, and NASDAQ futures lead with a gain of 0.2 to 0.5%. This follows Tuesday's close, where the Dow fell 0.8% to around 48,501, and S&P 500 dropped 0.9% to 6,817, and NASDAQ slid 1% to 22,517, pressured by tech, industrials, and healthcare sector. When looking at economic indicators and data released, key focus today include the ADP employment report, February private payroll, ISM services PMI, and S&P global PMI for services. These could provide clues on labor market strength and economic activity ahead of Friday's official jobs report. The Fed's beige book is also due later, offering regional insight. When looking at Federal Reserve activity, no major policy moves today, but the Fed remains on hold after January's decision to maintain rate at 3.5 to 3.75%. Minutes from prior meetings highlight split on future path, with some openness to hike if inflation persists and discussions around AI's economic impact. The next FOMC meeting is mid-March. When looking at earnings reports and corporate news, a busy day with dozens of reports, including notable names like Moderna, Broadband, Ross Stores, Bach, JitLab, and others in retail, tech, and biotech. Pre-market movers include gains in some retailers and mixed action elsewhere. When looking at technical analysis and sentiment, indices are rebounding with recent dip, with the S&P 500 holding above key levels after testing lower. Volatility VIX remains elevated due to geopolitics, but dip buying has emerged. Sentiment is cautiously optimistic on de-escalation signals. When looking at sector and style rotation, defensive and value areas may see rotation amid risk, while tech shows resilience in early trading. Broadening out for mega caps continues. When looking at the commodities market, commodities are mixed but stabilizing after recent swings tied to Middle East development. When looking at supply-demand balance inventory, oil inventories and EIA data in focus, recent reports show steady demand but no major disruption. When looking at geopolitical and macro risk, Middle East conflict, now in fifth day, has supported prices, but reports of potential Iran-US talks and US assurance on oil shipping have eased fear, leading to stabilization. When looking at sector-specific trends, crude oil WTI around $75, Brent around $81 to $82, steady to slightly up, gold rebounding strongly, spot gold up 1 to 2% to above 5,140 to 5,200 an ounce as safe haven buying resumes after the dip. When looking at technical indicators, gold recovering from Tuesday's pullback, showing bullish momentum, oil holding support levels. When looking at cross-asset correlation, risk-off flows earlier boosted gold, equities showing some decoupling today. Moving on to the cryptocurrency market, crypto remains under pressure, but with pockets of resilience amid broader risk sentiment. Looking at volume, liquidity, and volatility, elevated volatility persists with Bitcoin and Ethereum sensitive to macro moves, recent dips tied to equity sell-off. Looking at on-chain metrics and network activity, limited fresh details, but institutional flow remains a watch point. When looking at correlation and risk sentiment, high correlation to equities, Bitcoin briefly rallied above 70,000 recently, but has pulled back in line with SOP. When looking at regulatory and news events, ongoing discussions around potential U.S. crypto legislation with pressure from political figures for faster action on bill. When looking at technical and behavioral patterns, Bitcoin and Ethereum traded lower overall, but potential for bounces if risk appetite improved. In summary, Wednesday's market open reflect tentative stabilization after recent volatility driven by Middle East tensions and macro caution. Equities are edging higher on de-escalation hope and key data ahead. Commodities like gold benefit from safe haven demand, while oil steadies, and crypto's broader risk trends lower. Investors should monitor today's economic releases, ADP, ISM services, and earnings for directional cues, with geopolitics remaining the wild card. Overall, sentiment leans cautiously constructive for the session. That's all I have for you today. Thank you for listening. If you enjoyed the content, don't forget to like, comment, and subscribe. And if you'd like to support the channel, feel free to buy me a coffee on Patreon. Thank you. Bye-bye.